Welcome back, everyone, to the Profluence podcast. Got Alec and Charlie from Gabelli here talking about their ETF, the fastest one in their firm's history on the sports side. So, fellas, should have done it in person, but great to have you here and excited for this conversation today.
Thank you, Andrew. I'm Charlie LaRosa. This is my colleague, Alec Boccanfuso, portfolio manager at Goals, and we're excited to talk about sports and why we launched this ETF.
So tell us first, we hear a lot about sports these days, but what do you guys even categorize that as, right? Like what fits into this category? You know, how are you defining it? Is it gaming, betting? Is Nike considered sports, or is that just apparel, right? Teams and leagues, obviously people understand, but how are you guys defining that as well? I think that's a big question that not a lot of people are answering these days.
Sure. I mean, when you look at the whole ecosystem, we want to look at it, through a broad lens. Obviously, number one would be a sport team. So most people are looking at, the Atlanta Braves, the Knicks, Rangers, Manchester United. But then you want to go a deeper level and maybe start thinking about, the sport tech companies that are looking at data, selling that data to, some of the sports books, even to the teams. For example, Sport Radar, Genius Sports. Then you look at the venues, right? Madison Square Garden, some of the developers of these stadiums, ticketing, hospitality. So Live Nation, the ticketing companies there. So we think about the whole ecosystem. You even mentioned Nike. Nike is a sport company in our mind. It derives a lot of its value from, sports, athletes, stuff like that. So we're really looking at a broad ecosystem across, all aspects of the sport world. And we don't really, as of now, have anything really in the betting space beyond Churchill Downs, which, the Kentucky Derby has some betting there, but we're mostly focused on assets outside of that, and maybe that evolves into the gambling space. But as of now, we're not really focused on that side of the thing.
Another thing, too, I would touch on, and maybe just bring it back to the Gabelli story and who we are in terms of how we think about putting these companies in portfolios. We're nearly $35 billion assets under management, and sports has always been a staple of our portfolio for a long period of time, specifically within our value strategies. And I think the way we kind of look at sports teams and sports assets specifically, when you look at sports franchises in these teams, is they're not as correlated to the market as you look at a typical company. We're not buying these teams because of earnings. We're looking at the value of these businesses and understanding the real asset. And understanding that sports teams over the last 12 years has grown at a 15% CAGR, we think this is a unique way to add alpha to our portfolios through these sports teams. So sports teams have always been a staple of our more diversified value portfolios. And when you think about how sports fits into an asset class now, launching this ETF gives you more alternative type of exposure in terms of investment product. You want to buy a broad-based market index, you want to buy a value fund. We think this is different. We think this is supposed to work in conjunction with maybe what you're buying in the rest of your portfolio. This is an alternative play, focus on an asset-based business that has a catalyst to maybe surface that value. And another thing I would just point out too that, Alec, we always talk about is we bring a private lens to public markets. We think all these sports teams are worth a certain value, right? And what it's trading for currently in the public markets is a significant discount to what we're privately valuing them. And that's what we see as our margin of safety. So we're buying these public sport team assets at a discount that makes us feel comfortable in periods of volatility or friction in the markets. We feel like sports is a great place to be as a storer of value.
Yeah, and if you look, our ETF is fully transparent. So, you could see our daily holdings.
Not to cut you off, this was perfect time as you were going into it. I was just, sometimes we like to, usually it's like an emerging league and we're sharing the screen and showing like what the sport looks like. But I was just going to share, we can go through it a little bit real quickly. Also allow people to see like on your website. Sure. So I'm just going to share my screen here. And here's the Goals ETF that we're talking about. But as you go to holdings, and obviously performance, doing pretty well of late, as I'm sure you guys like to tell people. And then this is where I got held up, and probably other people. You got to click this link to get the file. And so anyway, I have that pulled up here. Can you guys see that?
Yeah.
Perfect. Right. So if you want to go through any of these or where you sit, but super interesting, sure. Obviously portfolio across sports.
So yeah, as I was mentioning before, this is a fully transparent, actively managed ETF. So we're picking the individual stocks, the individual weightings, and you could see these holdings at the end of every day. So we like to call it, our top five, the core five holdings. Madison Square Garden Sports is our biggest holding. That owns the Knicks and Rangers. The other day, the company announced that they're potentially looking at splitting the company in two. So that's a major catalyst. The stock, was up a good amount on that news. The second would be Liberty Formula One. So obviously that's Formula One, the racing promotion. They just bought MotoGP as well. So now you have exposure to another asset there. The third would be the Atlanta Braves. Obviously, the baseball team, the only publicly traded standalone baseball team, and they have the Battery Park, which has been driving earnings outside of match day revenue. We also have Rogers is in there. You wouldn't think Rogers Communications may be a sports asset, right? But they own, they probably have the largest portfolio of sport teams in the world. They have the Blue Jays, the Toronto Maple Leafs, the soccer team there, and the Raptors. They've also publicly announced they might look to do something with that asset. So that's an event catalyst-driven play there. And then we have Manchester United rounding it out. Obviously that's probably the second most well-known and followed soccer team in the world behind Real Madrid. And, about 2 years ago, there was a transaction there. They sold 25% of the team at a significant premium to where the stock's trading. And we do think something will likely happen again in the next year or two. So we're very event-driven, and we selectively choose why these names are in our top holding.
Yeah, and it seems like, and correct me if I'm wrong, but part of the strategy you think about as well is not just singular assets, but some of these ones that even themselves are mini portfolios, where as you're looking towards Madison Square Garden, well, they have their own portfolio of sports assets, just like Rogers does and several of these others. How do you guys evaluate or look through that as well when there are multiple other subsidiaries or holdings underneath one company?
Yeah, it's an interesting question. I mean, that's where our experience throughout the years as value investors, and we call it private market and value investing. But we look at the Knicks and Rangers in the private market. You look at Forbes and all these valuations. They think it's worth I can't say the number right now. I think $13 billion in total is it?
Sure, yeah,
right. And then you look at the public market; it's trading a significant discount. The same thing with Rogers, right? You add up all the value, the private market values of those four teams I mentioned, and you would assume what that'd be worth to a private investor who would buy each of the team at the transaction multiples that we're seeing at record highs right now. So as a manager of one of these assets, if I was running Rogers, I'd see Madison Square Garden announced they might split the two teams in half, and the stock reacted super positively. Okay, now my stock in Maple Leaf Sports is what it's called. It's probably significantly undervalued on the public market since it's under a conglomerate umbrella. If I could, spin that out or even sell a minority stake in, each one of those teams or the conglomerate as a whole, you're going to be selling that at the private market value, which is a significant, discount or a premium to where the stock's trading now. And even, if you go down the list, you'll see something like Ferrari there, which, Ferrari makes cars, but Ferrari has, a historic F1 team. And we just saw, the AMG team sell a minority stake at I think a $6 billion valuation in F1, right? So if you have your Ferrari, you make cars, but a lot of your value is going to be derived from that F1 team. It's probably worth $10 billion and over. But that whole company is funneling into the team, brand equity and so on. So there's some hidden assets out there that I think if you put a nice value investor's lens on it, you'll find it, and there's a significant discount to what it should be trading at.
And I would just say, too, building off the Knicks story, one thing we really like there is we look at other transactions that happen in the space. So you see what a minority stake in the Lakers sold for last year of nearly
the full sale, like
$10 billion, right? But you look at that and you all right, so it was 85% for $10 billion, so that gets you to the Knicks around 12 or 13. But you look at the current share price for MSG Sports, and you realize you're getting the New York Rangers for free.
Yeah.
So if you take recent transactions in the space and apply something like that from the NBA to the Knicks, which the NBA is growing very fast, I think it's a different type of growth story than when you look at the NHL teams. But you can be an investor in the Knicks and Rangers and essentially get that asset of the Rangers for free.
Exactly.
So as Alex said, they get that conglomerate discount. When management or the board's reviewing a split off of these businesses, that's a catalyst surfacing event. And that's why the stock traded up on the news like that. So it's important to understand financial engineering, the impact that can have in these businesses, and how a conglomerate discount can apply to these companies now. But as they think about strategic alternatives, selling minority stakes, splitting up the sports assets, that's a catalyst surfacing event that unlocks value.
Yeah, and I appreciate you guys how you gave a little bit more context than just the answer to the holdings, and then obviously just sports as a whole and how you define it. And there was no perfect way to go into this, but now going kind of back one step, right? Why take your approach, right? Why not take an Arctos approach and go after minority stakes privately, right? Why go public markets? Why go ETF based, right? And maybe there's some education around what's an ETF as well. I think if you guys can touch on those things, I'm happy to resurface them and just keep us on track across that. But I think that would be there's no perfect place to go. You either go sports first or like sort of category first. And so I think that's the next evolution.
No, and that's a great way to introduce, why do we launch goals and why do we launch goals as an ETF? This is the 8th ETF that Gabelli's launched. We've been successfully launching different products in the mutual fund business and ETFs. When you think about an ETF, exchange traded fund, you're getting daily liquidity to buy a basket of securities through our portfolio that's actively managed by our team of seasoned professionals. So when you say why an ETF, it actually is the more superior vehicle. That's where the market's going. There's nearly 19 trillion assets globally in ETFs, about 13 trillion just in the US. We've seen over 900 billion in inflows the last 2 months. I mean, the active ETF business is growing at a rapid pace. And the reason behind this, when you take away anything from this call today, is ETFs are a superior product when you think about taxes. ETFs have this unique nature where they're able to dissipate the capital gains. So you're able to avoid paying capital gains on an investment in ETF. So whatever your price you sell it at, that is your cost basis. You're not going to be getting hit with an annual tax bill. The ETF structure in itself avoids that tax as much as possible. So we're launching in a superior product in ETF. And the theme of sports, we're super excited about it because we think with the current landscape, the current opportunities in the public market, we think now this is a better time than ever to capitalize on the global theme of sports in a portfolio that's rich with catalysts that we really think is going to come to fruition with these portfolio names. And Alec's going to talk about the theme of soccer later, so I don't want to steal too much of his thunder. But there's just so much excitement about these portfolio names and Manchester United and Borussia Dortmund and Juventus. And there's a story behind these names that we really think is ripe for the next 1 to 5 years that they're going to come to fruition, in addition to it being an alternative asset class. Now, coming to the question, why Gabelli or why us? We've had the ability of following these companies and these management teams for nearly 50 years. Our firm was founded in 1977 by legendary investor Mario Gabelli. We've been owners of Madison Square Garden Sports through different entities. Where you think back to Madison Square Garden and Cablevision, we've been following these companies for a long period of time. So we've generated compound accumulated knowledge in these businesses. We understand them really well. We have a great relationship with management teams. I mean, Alec was recently in Europe visiting with, senior officials of these teams, learning the story, understanding the value of these businesses, going to the stadiums, boots on the ground. And that's what we're passionate about. So we're building a portfolio, building this ETF that owns these basket of securities that we have high conviction in. We're adjusting the weighting to where we think there's an opportunity for an attractive risk-adjusted return through a tax-efficient vehicle, the ETF.
And maybe if I can, jump in, on, you mentioned Arctos and why this different kind of vehicle, public versus private. There are places for both, right? We came into this thinking about how do we get the everyday investor, the retail investor, involved in such a fast-growing sector, and one of the hottest sectors out there, obviously, as you know. And a lot of these, retail investors have been locked out. Berkeley, you look back, this has been kind of a billionaire's game. Then you started to see the financial sponsors, the private equity firms get involved. And a lot of the time, you have to be an accredited investor. You have to have a minimum ticket of a lot of money. More recently, we've seen some vehicles at $25,000, so it's getting lower. But then again, a lot of these structures, you're kind of locked in to maybe one investment that you get, minority stake in just one team. You're locked in for how knows long, 3 to 5 years, 10 years. You're paying potentially 2 and 20. Our ETF right now, usually it's 90 basis point fee, but for the first year we waive that, so there's no fee for the first year. You have daily liquidity, right? You could sell it at any time you want. You're not locked in. And then it's, one share is 25. Right now it's 25 and change. You need $25 to own one share and get exposure to all these, these teams and leagues and everything involved in the sports sector. So it's just democratizing, I think, sports ownership for the average Joe. And, we're even surprised, honestly. We thought this would just be, catered towards more of the retail, but we've been having discussions with a lot of family offices and institutional investors who are weighing this versus, looking at a private investment vehicle where, again, maybe they don't have liquidity. Maybe it's, they're locked in and it's just one team that maybe they're not that excited about. And in the meantime, they can invest in our vehicle and have exposure. So I think, that's
I think you covered it all there. That was helpful. Now, sort of in the sports realm, right? And you went through some of your assets. A lot of these teams and leagues and even properties are still private, right? And so you can't even, of course you can get this basket like you talked about, but if you really want to own, a piece of the Pittsburgh Steelers, there's no way, whether through a basket or, through an ETF or through, there's no way to get it unless you're a billionaire, like you said. what do you see happening in that market? Like, are you also going on the basis you think more teams are going to go public? Are you going on the basis you think sports is growing more and there's going to be more companies that fit into your world? How do you look through that? Because again, like relatively speaking, it seems like, again, without me trying to answer for you, there doesn't seem like there's a ton of even pure sports public company assets out there.
Sure. No, it's a great question. Rewinding to something like, just on the public markets right now, again, Rogers, maybe we see something there. So that's a whole new potential company. The Knicks and Rangers splitting, that's two companies. The public market teams or companies, a lot of the conglomerates might start trying to monetize so that, that opens the door just on the public markets with what we have. We do see a potential for new companies to come public. I don't want to name names, but if you look around, there's, ownership groups that own a couple teams that have, discussed potentially going public. There's even a talk of something like Fanatics, going public, which owns a lot of stuff across the sector. Even I've seen some reports on Huddle, some sport tech. So our assumption is I think there'll be a lot of new publicly traded companies across the ecosystem. I do think if we do start to see the private equity space and a lot of these deals getting too crowded, maybe some exit liquidity might be on the public markets in the future for some of these teams or leagues. So there could be an influx of new publicly traded teams, or again, these conglomerates spinning out their publicly traded assets. So we do think it's going to grow, whether that be in teams, tech, memorabilia, whatever it may be. I think there's a bright future, and the public markets do offer a lot of these private equity firms who've been locked up for a while, that exit. So we're super excited. Even if it didn't grow, which we don't think, we do think the universe will grow. We do think there's enough of an investable universe right now. I don't think that was true 5 years ago. I think this is the perfect time. Formula One's now a standalone. The Braves are standalone. Again, Madison Square Garden standalone. So this was not something you could have made into an ETF probably 5 years ago.
And I would say too, Andrew, when you look at the holdings weightings and look in even the top 5, top 10 positions, majority of those are the sports franchises or the sports assets that we think have those catalysts to unlock the value. And at the end of the day, we're going to build a portfolio that we think we can drive the most attractive risk-adjusted return. So I think that's the focus here on the portfolio. When we look at other options or other teams, obviously we're going to weigh what type of return potential we think that's going to drive. And, there's still a good amount of securities now that we think this portfolio can yield a very attractive return over the next 3 to 5 years. But even if, say, worst case scenario, I guess best case scenario for the fund shareholders, if some of these teams get taken out or minority stakes are sold, these catalysts are being realized, obviously there's going to be less publicly traded companies, but this portfolio is going to benefit from those returns. So will there be other potential avenues or partnerships we have to have other exposures to the sports franchises through maybe the private world? Who knows? That's possible. There is certain ETF out there that you can have exposure to privately traded companies. Obviously not part of the strategy today, but if this portfolio has these catalysts realized and the public market works its way down to less exposure, there's other ways we think we could participate in as an organization as we offer this product to retail investors. But I think our main goal is finding a product for retail investors with this attractive fee structure, the liquidity of an ETF that anyone could buy. As Alex said, $25, you could buy a share of goals and own a piece of all these sports teams. I mean, what an opportunity that is. I wish when I was a first-time investor, when I was in high school, I could buy a product like that. I had exposure to these different types of sports teams. I mean, it's just an awesome opportunity.
Yeah, without trying to cut you off, but
Yeah.
just even, thinking about the universe, it's pretty funny that if you look across Europe, South America, there are over 20 publicly traded soccer teams, right?
Crazy.
And, me, I'm a huge Juventus fan. It's my favorite team in Italy, based in Turin. And I found out years ago that it was publicly traded, but the problem was it was traded in Milan. Like the ordinary share is traded in Milan. There is a ADR, but it's very, there's not much liquidity. So I could never personally buy, the Juventus stock in Milan as a retail investor. My brokerage, firm didn't offer it.
Absolutely right.
A lot of brokerage firms don't offer it. Even some, institutions, they do have access to foreign ordinaries, but it's very expensive to own. We're, giving you access again to over 20, soccer teams globally that you couldn't own yourself potentially. There's a whole universe out there that maybe, some people don't even know was out there.
Yeah, I'm glad you covered that. I was going to go international next,
Yep.
of like how the assets split up or how you're looking at it from a geography lens as well. But it seems like you're already thinking about that and it's built in. So I don't know if you have percentage based on that, but it seems like you're already doing that a little bit.
Yeah, the vast majority is US based, but We do have a good amount of holdings. Most of them in Europe are soccer teams: Juventus, Lazio, Benfica, Celtic, Copenhagen. I can go down the list. You can look through. We do have, CTS Eventum. It's the Live Nation of Europe. That's based in Germany. You do now look at there's a Japanese company, DNA. We have in there. On the surface, it's a video game company, but then you see that they own the Yokohama baseball team. I think they won the Japanese league last year. That's where the pitcher went. I forget his name. The famous pitcher on the Dodgers.
Oh, yes.
Yeah, he was playing there.
Trevor Bauer.
Yes, he was there. So that, they're building out a sports city, something similar to the Battery out in Japan. So, you could look across even Mexico. We own Club America through Olamani. They actually did a transaction recently. General Atlantic's taking a 49% stake. So shareholders will get a nice distribution from that. So globally, we're looking all around. There are opportunities. Obviously, we're picking the best ones we think, will return the best capital or returns for shareholders. But as of now, we're mostly focused on the U.S., as you could see in the holdings list.
I'm curious, as you often we become interested in things through hearing the rebuttals, when you're talking, again, this is maybe more family office or institutional type folks. What are sort of things people say or bring up of why they feel like they shouldn't do it, and how are you answering it? And I can throw a few on your plate, if you want me to, but I'm just curious sort of what are the common themes that people are saying, and then how are you answering them of why? And then it sounds like you're obviously converting a lot of these people, so you're answering the questions correctly.
I think maybe the one we get is, obviously if you're an institution, hey, why can't I just make this portfolio myself, right?
Sure, yeah.
I can go out and do it myself. I can buy these 40 names and that's it. But then again, I mentioned a lot of people don't, even family offices, don't have access to some of these obscure, markets. Mexico, Japan's easier, but, some across Europe, Denmark, we're buying stocks in. Sweden, it's either the access is not there or is expensive. Instead of going out and recreating it, why don't you just, you buy, this wrapper with no fee. And, that's kind of it, based on, we have it already set up. You don't really need to go out there and do it yourself. It's expensive and there's no fee on it. So that's probably the top one. I don't know what else if you want to ask them, but if
yeah, I mean, go ahead, Charlie.
Yeah, Andrew, it was interesting. We had a call actually last week with a very large portfolio manager. It wasn't a family office, but they did pick stocks for the portfolios they manage in the hundreds of millions for a global asset management firm. And what he said to me was, I pick stocks for portfolios and I rarely add an ETF or a pooled fund vehicle because, I'm picking the securities I think are going to be attractive. But for something like sports, it's a different type of story and it's a different type of research that goes into it. I don't have the time, or my analyst and its team doesn't have time to understand that industry, to follow these companies, to focus on those catalysts. This is a unique vehicle because you guys are building a product that focuses on the franchise value, growing within the sports space. So that's lucrative to me. But there's also other assets in this portfolio within media, entertainment, gaming, that does take real analyst coverage. I mean, our team at Gabelli is 35 plus sector focused research analysts covering this space. And even for something like a company like Diageo, which has a small position in the portfolio, it's a global alcohol firm. The price has been really shooting down the last couple of years. We think there's an opportunity there, but also they own a small stake in a pickleball team. So we think there's these different types of catalysts, there are different types of opportunities that we're aware of. And then maybe someone was just attacking it from the sports lens would miss out on some of these opportunities. Think of a conglomerate company like Disney with exposure to ESPN and the broadcast of sports. I mean, we want to pick companies that benefit from the theme of sports beyond just franchise. I mean, the portfolio's focus is sports franchises, but you need to understand that full ecosystem to really capitalize on that value. And I think when a family office or a very large RIA thinks about that for asset exposure, they want a team that's boots on the ground, really understanding that and is adjusting the portfolio actively to those weightings. In addition to what Alec mentioned about the international exposure and some of the challenges that can happen with building a portfolio internationally.
And like Charlie mentioned too, as well, we've been shareholders of a lot of these companies for a long time, and we're large shareholders of many of them, like the Braves, MSG, and United. So we do have access to management teams. We talk to them regularly. Maybe it's, it could be much harder for, an institution family office who doesn't even own, that stock to get access to the CEO, the CFO, get access to go watch the game in Europe, or even, we have a conference every June, the Sports and Media Conference.
Our 18th annual upcoming this June. Everyone's more than welcome to register. If you go to the Gabelli.com website and our events page, you can join our call, listen virtually, and just say you're a gold shareholder. What an awesome opportunity.
And we'll have a bunch of management teams there from these, from these holdings. So the access is something incredible. And I think that's something that a lot of people don't have, and maybe they didn't think that they needed. You definitely need to talk to, managers, CEOs, CFOs on a consistent basis to understand the story and the investment.
Yeah, so it seems like it's more structural is how more of the questions come up than like why sports, which I think is interesting. So it seems like, at least from what you shared, more of the questions are around structurally, why should I invest in you versus, okay, it seems like most people are like, I do believe in sports in this category, but why you guys, which I think is interesting and encouraging, likely for everyone listening, but maybe not. I don't know. Maybe you have had
no, that's totally true. We've spoken to how many people, and maybe I spend 2 to 5 minutes in an hour conversation on why sports. And then most of the people they're already super excited about sports, and they could talk about sports for hours. If you're a sport fan, and you can go on and on and on about these investments. And I don't think anybody's really doubting, who we've spoken to is doubting the growth of sports or, the fundamentals of these businesses and the stores of value. I think it's been a really easy conversation.
I think too, we talked about earlier about that 15% CAGR over the last 12 years for the big four sports teams. And obviously so much of that is private, right? And you go to the public markets, and maybe some of the rebuttal we'll get on the sports side is like, well, is the public market the way to really get this attractive return? But you realize the public market, because of the fact it's a public security, has that significant discount to what these companies are actually worth. So we launched this product at a time where we actually think these catalysts are going to happen, which does help with that claim of why sports and why now. It really helps support our story for why this type of product made sense for these type of public securities now, because the environment's ripe for these catalysts over all these years of maybe some of these assets being part of a larger conglomerate or not being able to really surface that value. We really think a good chunk of these names have that catalyst coming up in the near future, which is what made sense for us to launch this ETF product.
And looking at that, even bringing it back to catalysts and like soccer, obviously the World Cup's going to be here. I think it's 100 days from today, which is pretty incredible. But, soccer is such a hot investment for a lot of these, family offices, private equity firms out in Europe. And you look, again, like he said, the public market values of these teams is so far below what they should be privately trading at. So, for example, again, Man United, Jim Ratcliffe took a 25% stake at a $33 per share valuation. The stock's at 17 right now, I think 17, 18. So that was one, somebody who's taking advantage of that. Again, we do think something will likely, play out because they need to build out a new stadium, probably need new funding. Another team is Juventus. Historically, always been trading at a massive discount. I think a couple months back, Tether, a crypto company, for the Agnelli family to buy out the whole team at, I think, a 1.3 billion valuation. That's, again, way below, it should be over 2 billion. But that's another example of just, the disconnect. And I think we're going to start to see a lot of factors trying to come in and narrow that gap and take advantage of the valuation.
Yeah. In terms of, this sort of goes to a couple different points, but, if you're looking at a private fund, again, everyone's a little different, but like you said, it's going to be maybe a 10-year window. Like, hey, in 10 years, our goal is to increase this and return it. If people are investing in the S&P 500, for example, typically, at least from what I've seen, it's essentially till investment or till retirement or until they're dead and pass it on, right? Mm-hmm. How do you guys think of like the goals ETF? Is there certain timelines? And again, this sort of goes to also just like education of how these things work. Is it lifelong and people just pull out when they want? Do you guys think of this of like, hey, we want this ETF to run for 100 plus years? I guess like timelines is an interesting piece of ETFs for both retail and then obviously private investors as well, because it's typically much different, especially for when you go, AI, a lot of people are probably buying AI ETFs right now, robotics ETFs, right? And it's like, okay, out of sports ETF, what's the timeline in your guys' head of like a peak, or is the peak just forever because you're rebalancing, right? So a mix of education and how you're thinking about it would be helpful.
Sure. Yeah. I think when you go into our longstanding history as a firm and how we kind of create our strategies, we're long-term shareholders, right? We're not trying to launch a product or come up with a vehicle that we think is going to generate just a short-term return. And that's the main story we're trying to pitch. All of our products, specifically our ETFs, are long-term oriented. When we think about our ETF suite at Gabelli, and specifically the Goals ETF, we're focused on these thematic topics that we see within the investable universe that we're really excited about. Some of our other ETFs is commercial aerospace and defense, financial services. We have a dividend small cap that we think is going to benefit from the theme of attractive small cap companies and dividend payers that's underperformed for the last couple of years. But overall, we're trying to focus on this theme that we really think is going to grow over the next 5 to 10 years and something that we're really excited about. Sports teams, a store of value. We think that opportunity is now. Like, what a great opportunity to get in. Now, is that catalyst going to be realized in the next 6 months? We hope some of those start coming in, but we feel really good about it when you come 3, 4, 5 years from now of how this portfolio is going to yield returns. We talked about the different ways how we can rebalance and actively manage it and kind of adjust over the period of time. And we hope we have that problem where some of these names get taken out and we have to find more creative ways to generate alpha for the portfolio. But that's our job. That's what we want to focus on. We want you to be an investor, be along for the ride, understand these names, because it is a super attractive space. And we think this World Cup, which, Alec, I think you should definitely go into that, but the World Cup being a major catalyst, just as a hockey fan, and obviously we have the Rangers within this portfolio, but look what happened to the USA with just the women's and men's team winning the gold medal. People that are watching hockey, talking about hockey has never been seen before. That wasn't a catalyst. That was something we were thinking about for this portfolio that was generating buzz and interest. But the calls and questions we've gotten from family offices later of like, hey, how to play sports, how to play hockey, how do I participate in youth? Because now more people are going to pick up a hockey stick because the USA won a gold medal, both men's and women's. So there's amazing themes like that are happening in the US, happening globally, that we can benefit from. So I think that's just an awesome opportunity on top of everything else that we anticipate, like the World Cup, Super Bowls, different major events like that.
Yeah, and sports has just evolved so much from, even when we were growing up. So again, you have sport tech, you have all these different, sports coming into the U.S. market, padel, pickleball, all these different things, right? And, you never know what's going to happen in 5-10 years, what's going to be out there on the public markets. But even you mentioned something like, a lot of these investors are going into AI ETFs or AI plays. We look at goals as an anti-AI play,
Sure, absolutely.
It's been performing well in a market that's been all over the place, volatile. When a lot of these software stocks are getting hammered, goals is actually up on that day. I hope, people don't start to watch in the future robots play sports, right? I think we're, sports is pretty insulated, and AI will only help, with the metrics and the technology and data and youth sports behind it. So we're long-term viewers, and we think this is just going to run.
Yeah. On the AI front, interesting. I'll do a wider piece, but for anyone listening, saw this. I don't know if either of you two saw it, being sports fans as well. There's these high school athletes now. They're using AI to make their highlight tapes better. And so they're like throwing off coaches. And I was like, everyone's like, AI is going to automate so coaches never have to go in person again. The reality is actually AI is going to push everything to in person, which is where sports is, again, why I'm super bullish and why I'm building in the space as well, even. Overall, I think this has been great. If you guys have anything else to add, please do on any type of topic here. But we've covered all the main points. I could have this conversation for hours. So I'm also sort of like, hey, let's cut it at some point. We hit the main things. But yeah, if there's anything else to add, now's the time.
Andrew, just another thing to point on, and you just said it so perfectly there. What was the solution for coaches? It was going in person, right? It was going to enjoy the moment, go be part of it. It was the experience, it was the live experience. Yes, sports is the most obvious example of live experiences, and it's a big theme of the portfolio is these sports franchises. But also think about live entertainment. Think about concerts. What happened when we were locked up for those years with COVID? What did people want to come back and do? They wanted to go to a sporting event. They wanted to go to a concert. In this world of social media, AI, that's still where people want to spend their time and spend their money. This ETF benefits from the theme of sports, absolutely, but even broader than that, you're benefiting from the theme of live entertainment. So when you say, how is this portfolio going to perform 5, 10, 20 years from now? Sticking to the theme of live entertainment, what was the solution to that problem there with AI? It was getting there in person. And we think that theme is really going to stay consistent throughout this portfolio is people want live entertainment, people want experiences. That's where people want to spend their time and money. Time is going to be more valuable. If we have AI to optimize the rest of our lives, more time to spend on experiences. And I think that's important.
Yeah. And thinking about sports, just always being there and holding value and growing. I'm sure you heard this 10,000 times. They were watching, gladiators fight in the Coliseum, right? 2,000 years ago. And now I think this year we're going to watch gladiators fight on the White House lawns. It's never changing.
Everything comes full circle at some point, right? So
it's just going to keep going.
Let's not fool ourselves. Most of us would go to the Coliseum if it still existed today.
Oh,
so
100%.
It's why something I always talk about, like when people are building even emerging leagues, I say, how violent is your sport? The more violent it is, the greater your chance for success, which is why you see like the last real emerging league that's really popped off is UFC.
Yep.
And it's like, yeah. So
I've been doing it
it's
forever.
the closest thing to where it all started, right? Football. Why is that so popular, right? So anyway, Alec, Charlie, really appreciate you guys hopping on today. This has been great. We'll get the links and everything, Gabelli.com for everyone. You can find out more there. But, thanks for coming on, sharing knowledge, and just seeing a different side to the sports investment space compared to mainly the private equity guys we've had on. So thanks for your time.
Thank you, man. Really appreciate it. And hope to talk to you soon and see you down in Florida. Escape the weather up here. So thanks again. Appreciate it.
Anytime.
Yeah, no, Andrew, appreciate it. We're bringing in institutional capabilities within sports to the retail investor. It's something we're very prideful of. All of Alec and Chris Morangi, our co-CIO of Value, who launched this fund, their research is available on our website. So please read it, learn more about sports, reach out to us, ask questions. We want to continue the conversation. It just starts here, but it doesn't end. And we're looking forward to growing with our shareholders and telling the story of sports in the public markets.